So let's start Pgbp revision marathon. So the sections that are involved in Pgbp will be 28 to 44 series. These are the sections which we have. Now in this, all the sections are classified into few categories. Like there are two sections like 28 and 41 which are dealing with incomes and charging section. 28 is charging section. Anyhow, the charging section is talking about what incomes are taxable under Pgbp. So I call it as income section. 41. This is also talking about income related. What are the incomes that are taxable under Pgbp? It's in fact called as deemed profits. Getting it? So these two sections deal with income. 29. It is talking about computation format. So how to compute income under Pgbp? That's it. Literally speaking, this is a very useless section. Next, 30 to 37. Now see, how to compute business income? Income minus expenses. Business income minus business expenditure is equal to business profit. So what is the head of income? Income from business or profession, also called as Pgbp, profits and gains from business or profession. So how to compute profit of a business? Income minus expense is equal to profit. So incomes are these sections. What about expenses? What about expenses? 30 to 37. So section 32, section 37, these sections talk about expenses. These expenses, what we should do? We should reduce. We can deduct from these incomes to arrive business profit income. That's it. Okay. Now, to claim these deductions, to get these deductions, there are some conditions, there are some disallowances. So the conditions are discussed under section 40 to 43b. People call it as disallowance sections, but I call it as conditions for deductions. In order to claim these deductions, there are some conditions. Example, everyone knows 40a subsection 3. Now, suppose I incurred some expenditure. I am paying salary to my employee. Section 37, salary is covered under 37, residuary item. I am paying salary. I paid to employee salary more than 10,000 in cash. 40A3 says it will not be allowed as deduction. So indirectly 40A3 says what? If any expenditure you want to pay more than 10,000 in cash, you must pay by other than cash. If at all you are paying any expenditure more than 10,000, you must pay by other than cash. Permitted electronic mode, account pay, that. So nothing but these 40 series sections, they are talking about conditions for getting these deductions. If you do not comply with these conditions, disallowance will attract. Disallowance means what? We will not give deduction. If at all you reduce a deduction, you claim a deduction, we disallow it, we add back it. Getting the point? Now 44AA, 44AB. AA and AB, I just simply wrote AB because of the space. It's actually 44AA, 44AB. They're talking about books of accounts and audit. Then 44AD, 44ADA, 44AE. These are talking about presumptive taxation. So these are the broad sections that we have in Pgbp. Now, what we are going to discuss now in this revision, we are specifically going to discuss the concept of depreciation, scientific research, 35AD specified businesses and disallowances, and 44 series. Now you might have a doubt, sir, what about 41 deemed profit? I will be discussing along with depreciation certain provisions of deemed profits already, and I will be discussing along with 35 one subsection of deemed profit. So don't worry, remaining sections also will be covered slightly along while we are discussing all this. So all disallowance, 40 series all I'm covering, 44 series complete I'm covering. Only in deductions, only 3 or 4 sections I am focusing. That's it. Now without any late, so let's start depreciation. Now section 32 is the section talking about depreciation. Remember, when you're listening to this video, I will also cover how you have to compute how you have to solve the problems. I will explain you the solving methodology. I will not solve any problem, but I'll explain you how to solve. Getting it? And there is a detailed video of me on concept of disallowances which I uploaded some 1 month ago. Getting it? So you can watch that if at all you want to have full-fledged clarity on what do you mean by disallowance exactly. But anyhow, here I will be covering briefly. Now 32, depreciation. You know, in income tax, we claim depreciation on block of asset approach. What is it? We claim depreciation on block of asset approach. First of all, there are two conditions. There are two conditions in order to claim depreciation. As on 31st March of the relevant previous year, whatever the year for which you want to compute depreciation, no, as on the date, block shall exist. Block shall exist means as on 31st March. Suppose right now in exam they are testing you on 20 to 23 previous year. As on 31st March 2023, block must exist. Block means what? Some asset in that block should exist. What is block? I will come back to it. So there must be at least one asset in the block. Block should exist, and there should be WDV for the block. There should be written down value of the block. So the value, written down value of the block should also be existing. In fact, I call it as not written down value. I call it as value for depreciation. What is it called as? Value for depreciation must exist. In order to calculate depreciation, there must be some value. So that value should also be there in the block. So value should be there, block, asset should be there. If both these conditions are satisfied, then you can calculate depreciation. If any of these conditions fails, entire block is not there. Opening date of the year, block is there. But by 31st March, block itself is not there. Entire assets in the block were transferred, which means short-term capital gain or short-term capital loss will apply. Suppose block is there, but value is not there. Then also you cannot calculate depreciation. In both the cases, section 50 will apply. If value is 0 or value is going to be negative, then depreciation will not apply. Section 50 capital gains will apply. If block itself is not there, section 32 will not apply. Section 50 capital gains will apply. And in the capital gains, part 1 video of the marathon, getting a revision, so which I have already uploaded, in that you will find how to calculate capital gains on depreciable assets. There I told once again all these points. Right. Now, what do you mean by block of asset? If one or more assets which are used in your business, you are using many assets, right? Not stock in trade, not livestock. Getting the point? Normal assets, tangible, touchable, all that. Getting it? Intangible also, fine. So one or more assets, any assets, like I have a laptop, phone, all that, air conditioner, whatever. So all these assets which you are using in the business, one or more assets falling under same category, carrying same rate of depreciation. One or more assets which are coming under same category and also having same rate of depreciation. These can be grouped into a single block. Now, what do you mean by category? In income tax, we have totally 4 categories. 1, intangibles. 2, buildings. 3, furniture. 4, plant and machinery. There are only 4 categories of assets. Under income tax, any asset you buy, you bought a mobile, it's classified as plant and machinery. You bought some computer, it's a plant and machinery. You purchased books, research related books. A lawyer purchased research related books. For him, what is the books consist of? In income tax, we call them as plant and machinery. You constructed road, it's a plant and machinery. Very simple. Now, you constructed a building, it's a building. Furniture means furniture. Getting it? Sorry. Roads and all comes under building. All immovable structures, they come under buildings category. Getting the point? So mobiles, laptops, mic sets, touchpads, iPad, air conditioners, all that, books, that and all comes under plant and machinery. If you purchase a vehicle, car, that is also plant and machinery only. So 4 categories. In income tax, assets are broadly classified into 4 categories. Getting it? So immovable properties comes under building. Decorative items and all comes under furniture. Any other item which is not an intangible, which is not a building, which is not a furniture, any other item you purchase, it's a plant and machinery. Now, asset falling under the same category, carrying same rate, they come under, single block. Now, I will show you how many blocks were there. I will show you rates of depreciation. Getting it? Now, you see, here they have given, this is there in the ICA material itself, you ignore this. This block numbering is wrong, absolutely wrong. Now, you see, what are all buildings? So these are the rates which are important to remember. Getting it? Buildings which are used for residential purpose, the rate of depreciation is 5%. Buildings which are normal buildings, office buildings, 10%. Now suppose BSNL is there. BSNL purchased one building for work purpose, office purpose. So rate of depreciation is 10%. BSNL purchased another building for employee staff quarters, residential purpose. On the depreciation is 5%. Now here 2 blocks were there. One block is buildings coming under category buildings. Getting it? Carrying rate of depreciation 5%. That's block number 1. Another building they purchased for office, but it is not same block. It's a different block. Why? Rate of depreciation is 10%. So these 2 rates important. Suppose if I purchase any furniture, rate of depreciation is 10% for furniture, but furniture do not come under building. So I have to create a separate block for furniture. Very good. Next, remaining all other assets are called as plant and machinery. You see what are all there in the plant and machinery? Cars are plant and machinery. Bus is plant and machinery. Aeroplane is plant and machinery. Pollution equipment, plant and machinery. Medical equipment, plant and machinery. Energy, devices, plant and machinery, computers, books, everything, all these items are called as what? Plant and machinery. I told you, all these items comes under plant and machinery category. But remember, they all do not come under single block. They don't come. Why? Yes, they all come under same category, but not same block. Why? The depreciation rates are different. Now, you see, all cars, motor cars, getting it, oil wells, and any other plant and machinery. Example, mobile phone is not covered in the above list. In the above list, no, mobile phone is not covered. So mobile phone comes under general. Within the plant and machinery, remaining plant and machinery, residuary plant and machinery, we call it as 15. So mobile phones, motor car. Which car? Car used for official purpose. Suppose, no, if I am renting the car, I am hiring the car, then rate of depreciation on that car is 30%. Suppose I am using the car for my business purpose only, normal, my business, to travel from home to office, to travel on business purposes and all. I am not renting car. I am not a car dealer. Getting the point? I am not a transport operator. So for a transport operator, if he purchase a car for renting purpose and all, hiring purpose and all, for him, the rate of depreciation on that particular car is 30%. So motor tax is used for business on hire, 30%. General motor car, 15%. Now here there is some dates. This point is irrelevant, not required. Getting it? Next, aeroplanes, 40%. Air pollution equipment, 40%. Water supply project related, 40%. Books, annual publication or normal books, 40%. Now you see, computers, books, other normal books, as well as this aeroplanes, motor buses, aeroplanes, pollution control equipment and books, all these items I will group into a single block. Now, normal, this one, oil wells, and normal car which I use for office purposes and all, and mobile phones, air conditioners, all that comes into a single block. That's it. That's block of asset definition. I hope you are clear now. Getting it? Now, so that's about the block of asset. Now, what are the conditions to claim depreciation? So now we understood when depreciation 32 will apply, we understood. Now, in order to compute depreciation, what are the provisions? Asset must be used. Suppose during the year, we purchased the asset. By the way, wait, I am going to show you the computation format. That is very, very important in this entire depreciation, because that is one point where generally some students do mistakes in computation of depreciation. I will give you the easiest technique of computation of depreciation. Fine. So during the year, if you purchase any asset, you must use it. If at all in this year, you did not use it at all. You did not install. If you did not install in this year, you will not get depreciation at all on that asset. Whenever you purchase, we add it in the block. But if you want to claim depreciation on the purchases also, new assets also, you must have used it for at least 1 day in this year. Use it means you must install it first. Suppose I purchased air conditioner. Box also I did not open. Means air conditioner is not installed. I purchased. It's there in my office. But I did not even unpack it, unbox it. No depreciation on that AC. Remember, you must use the asset, right? That condition is there only for the first year in which you purchase the machine. Second year onwards, whether you use it or not, you can claim depreciation. You can claim depreciation. The moment you purchase it, you add it in the block. First year we will see, is it used or not? If at all not used in this first year, no depreciation at all. Second year onwards, whether you use it or not, it is there part of opening WDV. I will show you computation format, don't worry. So second year onwards, you will get. Now remember, in depreciation, we have two types of depreciation: normal depreciation, additional depreciation. Again, for power sector, there is a concept called straight line method. I will discuss at last. So normal depreciation, I am talking everything about normal depreciation. Now how to compute this normal depreciation? Computation format, very important. So for any block, generally opening WDV on 1st April 2022 will be there. Let us assume. In exam 22-23 year only they will test you. So that's why I'm taking 1/4/2022. Now, suppose, sir, this year only I started business, means opening value will not be there. In that case, only additions. So opening value you will put 0. Simple. Additions. Actual cost of assets acquired and installed. Assets acquired and installed during the year. So how much is the actual cost of assets that you acquired? Now these assets acquired in this year, in this year you purchased assets or something, you should split into 2 categories. Assets used for more than 180 days. How much? I'm showing you, by the way, this format for a particular block. Let's assume this is a plant and machinery 15% block. Plant and machinery 15%, plant and machinery 40%, plant and machinery 30%, plant and machinery 45%. So plant and all are plant and machinery blocks only, but rate is different. That's why they are categorized into different blocks. Next, now assets used for less than or equal to 180 days. Assets used for less than or equal to 180 days at both. So keep it outside. Now you will get, you will get subtotal. You will get a subtotal. Are you getting it? Now from this, any amount received, sale value, nothing but sale value or amount whatever you received because of transfer of part of a block. If you transfer any part of a block, suppose opening some 10 missions you have in this 10 missions, it may be mobile phone, laptop, whatever, 10 items you have. During the year you purchased 10 items. You purchased 10. Totally how many were there in the subtotal? 20. Now part of it means what? As on after purchasing 20 were there, but in the same year you sold some items also. You sold, let's assume 10 items only you sold, or 12 items you sold. So 12 items you sold, which means part of a block only you sold, right? Suppose you sold the entire 20 items, then full block is sold. If full block is sold as on 31st March, block itself is not there. All the assets in this block were sold completely, no depreciation at all. But part of a block, 12 items only sold. Opening 10, purchases 10, minus 12 means still 8 more were there. Getting it? Some value you sold, minus it. Now you will have this value, written down value of the block. What is it called as? Written down value of the block. This is called as written down value of the block. Getting it? On this value, we calculate depreciation. On this value, we calculate depreciation, which is working note number 1. So written down value of the block. So compute written down value. Now here there is an important observation. Suppose if this written down value is coming negative, suppose this subtotal let us assume 10 lakhs. Okay, let us assume this subtotal is 10 lakhs. Now minus part of a block you sold, right? Part of a block you sold for 12 lakhs. 20 assets you have, 12 only you sold, but the sale value of these 12 items were 20 lakh. So 10 lakh minus 20 it is turning negative. Block can never be negative. WDV of the block can never be negative. Now, if at all when you transfer part of a block or full block for a value higher than value of the block, this is called as value of the block. Value of the block means what? Opening plus additions. That's called value of the block. From that value of the block, you sold some items. If the value of the part of a block transferred or full block, if it is more than value of the block, opening plus additions, the excess amount is treated as short-term capital gain. Suppose I sold it for 7 lakhs only, part of a block, which means WDV of the block is how much? 3 lakhs is there. Now check it. Check the conditions. As on 31st March, is there a WDV of the block? Yes. As on 31st March, in this block, are there any assets? 8 assets were there. Only 12 we sold. So assets were there. Value is also there. So now can I compute depreciation? Yes. So we will compute depreciation in the working note. So that computed amount, you reduce it here. So balance is called closing WDV of the block. This will become opening value in the next year. Now you see here. Very simple. So opening value how much? Additions. When you are adding additions identify based on is it used for more than 180 days or less than 180 days. How to know whether it is used for more than 180 days or less than or equal to 180 days? When it is installed, check out. If the assets, if the machinery is installed, if the furniture is installed, if the building is installed, nothing but if the asset is installed before 4th October, it is used for more than 180 days. It is used for more than 180 days. If the asset is installed on or after 4th October or after 4th October, if the asset is installed, it is used for less than 180 days. It is used for how many days? Less than 180 days or equal to 180, less than 180. That's it. So less than or equal to 180 days. 4th October onwards, I told, right? 4th October means in October month 31 minus 3 days, 1, 2, 3, 28 days October, November 30, December 31, January 31, February 28, March 31. So totally 179 days only from October 4th to March 31st. 4th date is included, 31st March, both are included. If you install asset on 4th October up to 31st March, the number of days were less than 180 days. The number of days were less than 180 days. If you install the asset on 3rd October or before 3rd October, the asset is used for more than 180 days for sure. Are you getting the point? Just a minute. Just a small correction, ma. If the asset is used for less than 180, more than or equal to 180. If the asset is used for 180 or more than or equal to 180, I told date wise correctly, here I wrote wrongly, so you may confuse again. If at all you didn't observe, ignore it. If the asset is used for 180 days or more than 180 days, full depreciation we will claim. If the asset is used for less than 180, half depreciation will claim. Half means half rate we apply. Here we will apply full rate, but don't conclude. Directly we should not apply depreciation rate on these values. We should derive the value of depreciation based on the WDV of the block. Now I told right, depreciation, working note 1. Now what is working note 1? Be careful, observe it. Working note 1. So WDV of the block, how much identify? 3 lakhs in our example. 3 lakhs. Okay. Now out of this, first allocate the value for assets purchased during the year but not installed or not used at all. So first allocate the value. So allocated value, some amount. Now still what is the balance? So what is the balance value after this allocation? Identify. Now this balance value then allocate for assets used for less than 180 days. Allocate the value. Still some value is there. Then allocate it for assets used for more than 180 days. If still some value is there, then allocate it for balancing figure. Now on these items, apply full rate applicable for the block. Apply here also full rate. Apply here half rate. Apply here zero rate, because if the asset is not used in the year of purchase, no depreciation, zero. Here it is half rate depreciation. Here it is. Now in this case, half rate means what? In this example, block 15% block. So half means 7.5%, 15%. So and 15% is, that's it. This is how you should allocate the value. First, you should allocate for assets not used. Assets you purchased, added in this block, not used at all. To that value you should allocate. Now assets purchased, installed but used for less than 180, allocate to this. Then now I will give you a simple calculation. Suppose there is a opening WDV of a particular block was, let's assume 10 lakh opening value. Now you purchased the asset on or before 3rd October. On or before 3rd October you purchased some assets. Let us assume 3 lakhs is the purchase value. Now on or after 4th October. On or after 4th October, again you purchased some 5 lakhs worth of asset. Are you getting it? Now during the year, you sold part of a block only. You sold part of a block, not full block. Getting it? You sold part of a block. Let us assume you sold for some 7 lakhs. You sold from, let us assume, let us take some bigger value. Sale value, one example I will take is 15 lakh. One example I'll take is 15 lakh. Case number 1. Case number 2. Case number 1 is 15. Just a minute. Let me apply clear cut logic. So case number 1, 15 lakh. Case number 1. So this is situation 1. This is situation 2. This is situation 3. Right now itself I am giving you example here. Okay. Opening WDV same 10 lakhs. Okay. The information is same. Sale value only different in all the 3 situations. Okay. Now sale value is 17 lakh. Here let us assume sale value is only 10 lakhs. Better. Let us assume sale value is 10 lakh. Okay. Sale value is 10 lakh. Here sale value is 17 lakh. Whereas here sale value is 19 lakh. Fine. So let us say, and remember it's a part of a block. So opening is same. Now if you understood this example, I am telling you any type of question in the exam in depreciation, you can do very well. Now how to now let us look at just a minute. So let us assume this is the information. Now let us calculate WDV of block. Let us calculate WDV of the block. So what is it? By the way, all these are part of a block. So first 10 plus 3, 13 plus 5, 18 minus 10, 8 lakhs. 8 lakhs is the WDV of the block. Here it is WDV of the block is 1 lakh. And here it is going to be negative. So can WDV of the block be negative? So no, therefore no depreciation. The excess 1 lakh negative is that's a short term capital gain. Fine. Now minus depreciation, working note number 1. Now how to calculate? Case number 1. What is the WDV of the block? 8 lakhs. Now in this year, this 8 lakhs we should allocate. Is there any asset which is not used at all? No, zero. Is there any asset which is purchased for less than 180 days? Yes. How much value? 5 lakh. Now here we have 8 lakhs. No, I can allocate happily 5 lakhs. Suppose here instead of 8, 3 lakhs only there. Let us assume Here only 3 lakhs is there instead of 8 lakhs. Now how much you can allocate less than 180? Sir, I purchased for 5 lakhs, so 5 lakhs I will allocate. No. If the value available is 3 lakhs here, you can only allocate 3 lakhs maximum here. Yes or no? Suppose here 8 lakhs we have. But can I allocate 8 lakhs here? No. Less than 180, the total value itself is 5 lakhs. So maximum total value of the assets purchased is 5 lakhs, whereas value available is 5. So which means another 3 lakh rupee. So after allocating this 5 lakhs, how much balance is left? Still 3 lakhs. Now can I allocate this 3 lakhs for assets purchased for more than 180? Yes, here 3 lakhs is there. Here value also 3 lakhs is there. So 3 lakhs I allocate. So full rate 15%. Here half rate 7.5%. Here it is 0. Is there any balancing figure by the way? So out of 8 lakhs, 5 lakh allocated here, 3 lakhs allocated here. So 8 lakh completely allocated. Is there any value? 0. But anyhow, balancing figure is 0 at full rate, which is 15. So depreciation 0. Here it is 45,000 rupees. Here it is 5 lakh into 7.5. Yeah, 37,500. Here it is 0. So what is the total normal depreciation? 37,500 plus 45,000. 82,500 is the normal depreciation. So that's it. 82,500. Understood? Now what is the closing WDV of the block? 82,500 is equal to 17,500. That's it. Now how to calculate depreciation in situation 2? Now if you understand. Now what is the value of the block here? 1 lakh. Now allocate it. Is there any asset which is not used at all during the year purchase but not used? 0. Now how much is the value that I can allocate for less than 180? Actually 5 lakhs value is there. But remember, here I have allocation purpose only 1 lakh. So 1 lakh I will allocate here itself. Because up to 5 lakhs I have to allocate, but I have only 1 lakh. So 1 lakh only allocated. Now more than 180, nothing is there. Already 1 lakh fully settled. So 0. So add to 15%, add to 15%, add to 7.5% is equal to 7,500 at 0. So total normal depreciation how much? 7,500. That's it. Now remember here what you have to reduce is sale value, whatever amount you are receiving because of destruction, damage, demolition, transfer, sale, whatever reason, part of a block, for part of a block some amount you are receiving, that amount received you should reduce. Understood or not? Now this is regarding normal depreciation computation. Remember, intangible assets, for every category of assets you should create a separate block. All intangibles except goodwill comes under single block. On goodwill, from 1st April 2020 onwards, no depreciation at all on goodwill. So up to 31st March 2020 you can claim depreciation on goodwill being a part of intangible asset. Are you clear? That's it. This is regarding normal depreciation. Now there is a concept called additional depreciation. There is a concept called additional depreciation. What is additional depreciation? Additional depreciation is available for the SSEs who are engaged in manufacturing sector. Additional depreciation is also eligible for power sector, provided they are following block of asset approach. Power sector has an option to either follow block of asset approach or they can follow asset wise straight line method depreciation. Asset wise, if power sector is choosing asset wise straight line method, they don't have additional depreciation facility. Additional depreciation facility is available only for SSEs engaged in manufacturing sector and are following block of asset approach, and SSEs engaged in power sector and following block of asset approach. What is additional depreciation? 20% of new plant and machinery installed in factory other than vehicles. Vehicles you don't get additional depreciation, and additional depreciation you will get only on plant and machinery. That too if you install it in factory, which means if plant and machinery AC purchased, installed in my corporate office, no additional depreciation. Car I purchased, vehicles, no additional depreciation. Are you getting the point? So additional depreciation is only in respect of plant and machinery. Now how much is additional depreciation? 20% of actual cost. They straight away told you 20% of actual cost will be the additional depreciation. 20% of actual cost. Now whatever the assets you purchase, during the year plant and machinery, find out the actual cost, multiplied by 20, that is equal to additional depreciation. In this example, let us assume this 3 lakhs is newly purchased, this 5 lakhs also new plant and machinery. Second hand plant and machinery, no depreciation. You see the words which I used, new plant and machinery installed in factory other than vehicle. Simple logic. It should not be a vehicle, it should be installed in factory, it should be new, which means second hand plant and machinery, no additional depreciation. Office machinery, no additional depreciation. Suppose if you purchase a machinery on which 100% deduction is there, no additional depreciation on that. If any machinery is eligible for 100% deduction under income tax law, on that additional depreciation will not be given. Fine. Now this 3 lakhs is new plant and machinery, 5 lakhs is also new plant and machinery, both are installed in office. On this 20%, what is additional depreciation on this? Because additional depreciation is calculated on actual cost, not on written down value. Normal depreciation we calculate on written down value, correct? Whereas additional depreciation we calculate on actual cost, 20%. Whereas for less than 180, suppose if any asset is purchased during the year but used for less than 180, then 10% only, 10% of the actual cost only can be claimed as additional depreciation. So what about balance 10%? You can claim it in the next year. You can claim in the next year. Are you getting the point? So now 20% means 60,000 and 10% means here 50,000. So total 1,10,000. Now here 82,500, right? 1,10,000 will also be reduced. Then revised closing block is how much now? In this case, 8 lakh minus 82,500 minus 1 lakh is equal to 6 lakh 17,500. This is a closing block. Are you clear? This is additional depreciation concept. Now remember, in order to claim additional depreciation, asset must be installed. Suppose this year I purchased asset, I did not install. Normal depreciation also you cannot claim in the first year. But second year, now I entered into second year. Now second year also I did not install. Normal depreciation you can claim in the second year even though asset is not installed, but additional depreciation until you install, until you actually use, you cannot claim. So in the year in which you used, in that year you used it for more than or equal to 180, then full additional depreciation 20%, otherwise half additional depreciation, which is 10%. Are you clear? That's it. I'm doing this on 7th November. Tomorrow is exam for students, getting it? So I'm uploading from yesterday so many videos for the benefit of various students. So I'm uploading anyhow. That's why, in order not to make you wait, I'm uploading parts and parts. So capital gains I uploaded part 1, part 2. Now this Pgbp I'm uploading in multiple parts. So I hope you understood regarding additional depreciation. So additional depreciation is available for whom? Power sector, manufacturing sector and power sector. Service industry, trading industry, they don't get additional depreciation. That's it. So are you clear? So that's it. Predominant concept on depreciation I have covered. Almost we spent 30 minutes time. 30 minutes time we spent. So this is the block of asset format which I showed you. Getting it? So that's it. Enough. Remaining points are not required. Unabsorbed depreciation, all these points, no, I clearly explained in this one, set off and carry forward chapter. Okay, that revision is also there, which I uploaded long back. So after finishing this, part 2 Pgbp will come, part 3 Pgbp will come. So after that, you go to chapter 6A reduction. There is a video which I uploaded some 15-20 days back. There is a video on chapter 6A clubbing, setup and carry forward put together. Anyhow, I will attach to this video that video also. Getting it? So let us consider this as a part 1, section 32. Now you finish watching this, take some half an hour to 1 hour break. Again, another video will come. Are you getting it? So next video will be on 35 AD, 35 scientific research and 35 AD. After that, I will do a video on disallowances. After that, I will do a video on 44 series. We're literally speaking 4 parts. Pgbp, I'm uploading in 4 parts. That's it. So listen continuously. Once this is over, take a break, just revise, go to the next video, just revise and go to that next video. I hope you are confident. That's it.